So the word audit has basically a universally negative meaning. I don't know of anybody who gets excited to think about a potential future audit, whether it is with the IRS or your employer or really anything to do with an audit. It's no different in the insurance world. Every policyholder from here to Timbuktu gets just a little bit nervous, at least, when you think about the possibility of a future premium audit. In this video, we're going to take a look at the insurance premium audit. What is it? Exactly why does it exist? Why is it necessary? And most importantly, what are some tactics that you can use in your business to make sure that you never get screwed by an insurance premium audit ever again? We're going to jump into that right after this. So the insurance premium audit, what is it? Why does it even need to exist in the first place? Very simply, in the commercial insurance world, when you go out and get a quote and talk to an agent and you get a presentation delivered to you, a recommendation, it's based on your projections of future performance. Obviously, none of us are time travelers, so when we go to an insurance company and ask for a quote, we are giving them a projection based on what happens in the future. And at the end of that policy term, the insurance carrier wants to verify that what you thought was going to happen is actually what happened. So the audit, in its simplest form, is simply a truing up, a reconciliation of any differences between projected and actual. Now, most of the time, this is in regards to gross sales or gross revenue or total payroll. So those two things, payroll and sales, really make up the vast majority of what we're talking about here in an audit situation. Most of the time, the way the audit goes, very simply, is the carrier will have someone reach out from their audit department. They will ask for verification of whatever the rating basis was. Generally, payroll and sales are what they're looking at. So they'll ask you for financials, balance sheet, profit and loss, income statement, something along those lines. And then you'll either get a refund or a bill for extra premium due. Now, this is necessary because there is no way to verify at the beginning. Now, in work comp, there's some things that can be done on a month-to-month basis. And that is definitely preferable for some people in some situations. But generally speaking, the audit is the only way to make sure that what you thought was going to happen actually does happen. Now, why is it very important to get things right on the front end of the policy? Because, very simply, there's a limited amount of ability to get a refund for whatever you thought was going to happen. The carrier is going to give, in some situations, as much as a 10 or a 15% give back at the end of the policy. But aside from that, you're going to be looking at an audit situation with no real possibility of a major refund if you miss your projected revenue or payroll. So, moving now into the meat and potatoes of this video, some very simple tactics that you can deploy to make sure that a future audit situation is as easy to navigate as possible. And the first one is very simply run a clean operation. Know your numbers, as they say. When you're making a projection at the front end of a new insurance program or a renewal for an existing program, be as accurate as possible with your agent or broker. And if you're going to guess, if you're going to make a guess, make sure it's on the lower side, the conservative side, that you feel very comfortable in reaching, because when you're looking for a refund at the end of the policy, if you missed your revenue target and you come back to your agent or broker and say, hey, I didn't hit my number, I want some of my money back, you can get generally 10, maybe 15%, but usually 10 is the limit of a refund if you miss your revenue target. So it's really important that we're getting that right on the front end and making sure that if you're going to err in one way or the other, it's better to err on the low end because, as we'll talk about here in just a second, there's some tools that RiskWell provides you that makes the tracking during the policy year be a whole lot easier. The second thing to do to make sure that you're not going to get screwed in an insurance policy audit, premium audit, I should say, is that all of your sales and your labor, your payroll, are classed correctly. And it's really important that you're communicating this to your agent, and honestly, that your agent is doing their job and communicating it accurately to the carrier. Perfect example. We work with a lot of roofers, a lot of general contractors, and heavy contractor classes, excavation and things like that, that carry a lot of weight in a rate per $1,000 of revenue, which is the baseline rating factor for your business insurance. Your general liability is going to be a certain dollar amount per $1,000 of revenue. Now, a really slick and unethical game a lot of agents play is they will class certain revenue as being a different category. Instead of being a roofer, your agent might put you down as a carpenter, which has significantly less rating involved. So you want to pay close attention to how the policy is rated and how it's communicated, and make sure that your actual business operations on the sales side, on the payroll side, reflect what your business is actually doing, because they will be looking at that on the tail end and asking questions based on the classification of your sales and your payroll. Third is managing your third-party relationships, and I'm mostly talking about subcontractors here, because if your subcontractor is doing what they're supposed to do, if they have insurance in place, if they have given you additional insured status, waiver of subrogation, if you have a hold harmless agreement in your subcontractor agreement, then you're going to be in a much better situation, because during an insurance premium audit, if it is determined that your subcontractor was not insured, more times than not, their revenue will get placed on your program, and you'll be responsible for additional premium based on the subcontractor's operations and not just yours. So if you're running a tight ship with your third-party relationships and you're making sure that your subs are insured, or at least knowing about them being uninsured on the front end and planning for it in your insurance program, then you should be in a much better place for the audit. The worst thing that can happen is when you think you have an insured sub, in fact, they are not an insured sub. And we have an entirely separate conversation on managing those subcontractor relationships elsewhere here on the YouTube channel or on our website, depending on where you're watching this video. But if you're managing your subcontractor and third-party relationships well, you're going to eliminate an entire category of risk factors for your insurance premium audit. The fourth and final one, and this is where RiskWell has a major impact for you as the client, is in regards to tracking your gross sales and payroll and having a regular conversation with your agent if things change during the year. Now, I'm going to show you something that we haven't shown on any of these videos before, and that is a tool that RiskWell has created to make it a whole lot easier for you to track your sales and payroll on a monthly basis and predict with serious accuracy what your audit situation is going to look like. So I'm going to go to the screen share now, and we'll show you guys exactly what I am talking about here. All right, so here on the spreadsheet, and we make this available to all of our clients. So if you don't have one of these yet, just ask us for them and we'll be happy to assist. So you've got the audit calculator here. This is where the business name comes in. And before we send this to you, we will plug in your revenue and the rate for your program. And then on the audit side of things, there's a couple of different ways that we can handle discounts. We're not going to talk about the difference between a split rate or an audit credit in this video. That is a different video, and check out that here in the playlist. We'll be having that uploaded shortly. But we'll plug in the actual data, and then you get this page right here. And the start date of your policy is reflected here in these months. And all you got to do is plug in your actual revenue, and that is dollars in the door, not dollars for contracts that are signed. This is actual revenue in the door that is on your books. And the cool thing is it will tell you projected revenue remaining, actual insurance premium used so you can understand what your cost basis is, and the remaining premium. And then once you get to that point where you have met your projected revenue, You'll see what happens here in just a second. So just as an example, we've got, let's see, the first 4 months, everything happens exactly like it's supposed to. And you see each time we do this, the numbers here are adjusting. But let's say you sign a really big fat contract and it brings in $500,000 in value, and you've got another great month after that. So now look what happened. We are officially past the projected revenue for the year. And you'll see over here that we have, in the sake of this example, we've given you a split rate of anything beyond $1 million in revenue will be charged at $9 per thousand instead of $10 per thousand. So that's where the example comes in. And you'll see that on the spreadsheet here, you've got an estimated audit premium of $900. And that is based on the extra $100,000 in revenue. So throughout the year, let's say we have exactly the same $200,000 and things happen a whole lot different than you thought they were going to. You end up with a great year. You projected $1 million in revenue, but you ended up with 2.3. That's a really good problem to have, right? So looking over here, you can see the actual premium used. It ran out in December, and premium remaining, it ran out as well. It tells you revenue in excess of projected. And you see down here, we got $1.3 million in extra revenue that you were not counting on. And you have an extra premium of approximately $11,700. So that gets you very close to what the real audit ends up being. And on the work comp side of things, we have a very similar thing here. So you'll see it down here, we've got 4 classifications. Most businesses will have 4 or less classifications. So we've put this in, and just for the sake of example, let's say this is a landscaping company. So they've got landscaping payroll, but they've also got the officers, they've also got clerical, and they've got outside salespeople. All together, projected payroll of $1.22 million. We've got a weighted average here of the rate per 100 of payroll, and that takes into account all 4 classes. So we've got a weighted average of $2.25 per $100 in payroll. So you know going into this that your $1.22 million in payroll is going to cost you approximately $27,000 in workers' compensation premium. So now we do the same exact thing we did for the revenue over here, but we do it in this case for payroll. So once a month when you're done with payroll, you come in here and you say, hey, I've got $150,000 in payroll this month. And you can see that it changes in real time. So let's just go ahead and plug this in month at a time, and you'll see what I'm talking about here. All right, so now we've gone over. We've gone over by $130,000 in payroll, and we have an estimated audit premium of $29.20. Let's say we have exactly what's happened here for the rest of the year, and we end up with $580,000 in payroll beyond what we anticipated, with $13,000 of additional premium due. And you know that in real time before you ever get to an actual audit situation where you get slapped upside the head with an unexpected bill. And then at that point, let's be honest, everybody's mad, right? Okay, so that is basically the value that we deliver with our sales and audit tracker. That is available for every RiskWell client. Please feel free to reach out if you haven't received that, and we'll be glad to provide it for you. And that's it for our conversation here on the audit. It can be a very painful thing if you're not ready for it, if you're not preparing for it. But when you take some precautions in your operation and you're working with RiskWell to handle anything that you might need as far as projections and looking forward into the future, you're going to be a lot better prepared to have the audit conversation. And that's it for this video, boys and girls. If you want to reach out to our office, it is, no, I'm pointing in the wrong direction here. It is right there on the screen. You can reach us at 469-678-8001, or just email us at commercial@riskwell.com. And please make it a great day, boys and girls. We'll talk to you soon.